It's the Savvy Investor radio show and podcast now on YouTube as well. So we thank you for watching as well. All this great information, you can take it with you wherever it is that you go now, whether it's podcast, whether it's YouTube, or you're listening to the radio. Get the great information that we provide for you here each and every week, like taxes. Taxes, taxes, taxes. Are you paying too much in taxes? Well, those are questions that Mike and Ryan can help you answer. And there's some things that are okay to DIY. Ryan, I know that you're a do-it-yourself kind of guy. You do a lot of fixing on cars and automobiles, right?
Yeah, unfortunately, pretty early on in the relationship with my wife, she learned the fact that I used to do general contracting.
Oh boy!
In college, and I'm very handy. So
you're the guy.
I'm the guy. I'll do pretty much anything: plumbing, electrical, carpentry. The only thing I don't touch is drywall because I find it to be the most. No matter how hard I try, I'm always super annoyed, and it never looks good. That is, a true art form as far as I'm concerned. The people that can do drywall out there. So yeah, I do a lot of stuff myself, but begrudgingly, I've been trying to convince her that, hey, maybe it's better that we hire somebody to do this so I can have more free time.
So you're more comfortable doing electrical work than drywall?
Mm-hmm. Absolutely.
Wow. See, I'm just the opposite. The electricity thing scares me. Just because you can't see it, is it on? Is it not? And of course, climbing up to do work on ladders, I tend to fire myself on that and hire somebody else to do that. One thing that you shouldn't do on your own are taxes. And I found this interesting. There was an article in Newsweek that said that the surprising number of people still do it yourself when it comes to their taxes. And you guys have to see this, I'm sure. When clients are working with you, you of course, do their taxes as well. And that's kind of the DNA of your finances. But let's go through this list because I want to get your opinion on this, and that way we can be better informed. 5 reasons that you need a tax advisor now more than ever. Number 1 here is you want to build more wealth. What does that mean?
Really what that means is I want to be able to grow my money as much as I can. Mm-hmm. And, if you think about your 401k, that's pretty much what everybody's single biggest asset is outside of the home. And it's one of those accounts where for years and years and years, the government's been telling you, hey, put your money inside this 401k, invest it in the stock market. You're not going to use it for 20 or 30 years. And oh, by the way, you get a tax deduction for doing so because, you're reducing your taxable income. But nobody ever stops to think that, I have a silent partner in my 401k, and that's the federal government. Right off the top, you're going to lose 20 to 25% of whatever you take out of that account. For most people, that's what happens. And if you live in Maryland, it's another 7% on top of that. So, having a tax advisor, someone who doesn't just prepare your taxes, someone who you're not just seeing once a year and handing your W-2s and your 1099s to and all your other stuff, and then they're just turning around and giving you back some forms to sign. It's sitting down and saying, all right, here's how your taxes are now, today, right now. Here's what happens in your retirement plan. Here's what happens to all that money you've saved in your 401k if we just leave it there. Here's when the tax time bomb happens at 72 or 75, depending on how old you are for the required minimum distribution. Now, here's what happens if we change your strategy. If we start doing Roth conversions with your money, here's how much more you're going to save in taxes by doing this. But more importantly, here's how much more money you'll have available to you over your lifetime because you're not having to give money to the government just because. And then here's how much more you're leaving behind to the kids. That's the one thing that people always tend to forget about is when you pass away, all that money in your 401k, it has to go somewhere. It goes to the kids and they're going to pay tax on it at whatever their tax rate is 20, 30, 40 years in the future. Why not take all the guesswork out of that by sitting down today and having a tax plan in place so that when the money passes to the kids, you don't have to worry about what the tax rates might possibly be because it's all tax-free money at that point.
Yeah, it just blew me away when you guys said that if you don't do anything with your taxes, generally speaking, you could lose 20 to 30%. That's incredible. And we're going over 5 reasons you need a tax advisor now more than ever. We just covered number 1, you want to build more wealth. Number 2, there are a lot of incentives available. Is this the kick the can down the road, pay taxes later thing that we do with our 401ks?
Yeah, everybody pretty much, likes to use TurboTax. You like to do it yourself. And while I can certainly understand that, typically when people do TurboTax and it becomes a more complicated situation than you think it might be, simply because you've answered whatever question it's asking you, you've answered it wrong because you don't really understand the meaning behind what it's asking you. And 9 times out of 10, when people come in and I find errors on their tax return, it's because of that issue alone. And when we sit down, we talk about, all right, why did you do this? The answer is, I don't know. I just TurboTax did that. I just answered the question. So, that's kind of where simple mistake that they're just not aware of, or they've missed a pretty big opportunity because of that aspect. So that's kind of why using a tax professional works, is because, it's our job to be up to date on everything that's going on as far as the tax law goes, as far as everything that goes into those tax returns and how those tax codes work.
Okay, 5 reasons you need a tax advisor now more than ever. Number 3, the political landscape is crazy right now. And you guys have been talking about this for a long time. In 2026, the Trump tax cuts, for the most part, will go away, and it's a very good likelihood that our taxes are going up.
Well, like you said, for the most part, the part that goes away is the part that everybody likes, those lower tax percentages and those wider tax brackets. Those are the good things that go. Those are the good things that everybody likes about the tax cuts that go away as of January 1, 2026. Everything else that you hate about it, so the lower, the smaller bands, the higher tax brackets, those come back. And then that state and local tax deduction that's limited at $10,000, it pretty much hit everybody who lives in, New York, New Jersey, California, Florida, Maryland, Virginia, those areas, that sticks around. So everything that you like goes away. Everything that you hate stays in place. And having that tax plan in place kind of goes back to, that Roth conversion strategy, is having that tax plan. I make our plans based on what we know is going to happen to taxes. I know that for the next 2.5 years, essentially, we are set at certain rates. After that, I know we're going to go back to the Bush/Obama rate. So that's how the plan looks. But more importantly, when that law changes and the next administration, whether it's Biden again or another Democrat or Republican, when they change those tax laws, and I said when they change those tax laws, not if, we can adapt that plan to what those tax codes are. And if you're sitting here listening about, my financial advisor has never talked about the tax codes to me, he's never talked about the Trump tax cuts, my tax preparer has never said, hey, here's what a Roth conversion strategy would do for you. Or if, I don't know if TurboTax does this, but if it's never asked you about doing Roth conversions and putting a projection out there, I encourage you to give us a call at 866-597-1040, 866-597-1040, and we'll put together a tax planning analysis and Roth conversion analysis for you. 866-597-1040, 866-597-1040.
Call now and online at thesavvyinvestorradio.com. You can also click on the tax planning analysis button, and that'll get you to Mike and Ryan as well. Again, 866-597-1040 and online at thesavvyinvestorradio.com. We are going over 5 reasons you need a tax advisor now more than ever. Number 4, well, hang on, because the last one here is going to be a doozy, so you're not going to want to miss that. So number 4, the economy makes you nervous. How does that affect taxes?
Well, if the economy makes you nervous, you're really feeling like we're probably going to have an overall drop in the market. That's kind of how most people think nowadays. If you look at a lot of the talking heads, you can see on one day they'll saying a recession is looming, the next day, the next bull market is here. So a lot of the information can be confusing. And what you don't want to do, especially if you have mutual funds that you own directly with a mutual fund company or stocks that you own through ComputerShare, or you just have a brokerage account, a non-retirement account, whether it's with Fidelity or Vanguard or T. Rowe or any of those companies, you don't want to just go out there and say, sell everything in my account because I'm afraid of what the economy is going to do, because what you might be doing is triggering a massive, massive capital gain and a massive, massive tax. This just happened, the other day. I had a client come to me. They had a fairly significant amount of company stock, and they were feeling like, hey, I'm too heavily invested in this one company because it made up about 70% of their overall portfolio. And he said, you know what? I just thought about it, and I feel like the stock market's going to drop, so I sold off 30% of my holdings. What do I do now? And I went through the numbers, and I said, well, unfortunately, there's not really anything we can do about how you did this now, but you're going to pay. I think he was going to end up paying about $150,000 in income taxes just because he took action on his own and didn't think to sit down with a tax professional and figure out maybe there's another way. Maybe there's some other strategies that I could use to help eliminate or maybe even defer some of these taxes.
All right, so we're going over 5 reasons you should have a tax advisor now more than ever. Number 5 here, and this one's going to sound harsh, but I don't think it is. I mean, if you have a tax professional, if you have a tax advisor, much like Mike and Ryan, you're going to be, doing things right. Minimal mistakes, I guess, is out of compliance to say. But the IRS is watching. That makes it sound like impending doom there,
Yeah.
Ryan. The IRS really isn't that bad, is it?
Well, it depends who you ask. No, the IRS isn't that bad, but they did hire a bunch of those extra IRS agents, and most people think that, oh, this is the sky is falling because now we're just going to do a bunch of auditing. But in reality, what it is they hired all those people to catch up on that backlog, and that whole backlog started in 2020. When they sent everybody home, and then nobody wanted to come back and work. So they're really trying to catch up on everything. But, having somebody in your corner, having a tax professional in your corner, more than just a tax preparer, to help guide you through the IRS tax code, lets you know, here's what you can and can't do with your taxes. Here's what we can and can't do with the investments. Here's what we can and can't do with the income in retirement. Here are the ways we can really navigate these codes without really drawing the ire of the IRS. And if on the off chance you get audited by the IRS, or you get one of those fun CP 2000 letters where they're questioning things, you have someone in your corner saying, okay, no, let's not worry about this. Let's sit down and talk through this and figure out what the problem is. Because 9 times out of 10, whenever people get letters from the IRS, a lot of it is just a miscommunication between what they've received from the various sources of income and then how it's being interpreted on the tax return. That's where a lot of those things go. So that's really, you really need to be careful out there, because the IRS is always watching. Big Brother's always watching, but they just want to make sure that you are following the law to a T. And that's the benefit of really having a tax professional in your corner.
And I'm glad to hear you say that, because when you say the IRS is watching, and it all depends on who you ask.
Yeah.
Whether, oh my God, they hired more IRS agents. Oh, the sky is falling. No, they just want you to follow things. And as you explained it, everybody just take a deep breath and make sure that you're doing everything on the up and up, which you guys are and do at Prostatis here on the Savvy Investor Radio. And by the way, if you would like to sit down with Mike and Ryan and put together your tax planning analysis, you can do that today, because they're giving you the opportunity to do that. We're going to pause here for just a second to give you some time to call in at 866-597-1040, 866-597-1040.